Welcome back. After 2 days in the red, Nigeria's stock index returned to bullish territory on Thursday, led by banking counters. Also in company news, Airtel Africa is set to launch a $100 million share buyback starting March 2024. Now, this follows a strong cash generation and balance sheet improvement. In the meantime, let's take a look at the numbers, starting with the all-share index. If we could just get those numbers out. So that's all-share index. So gradually shedding some gains and now standing at just over 102,000 points, up 1.63% on Thursday. Let's go straight to the market capitalization. Let's see that marginal climb. So there you have it, up also by the same percentage point, up at 56.2 trillion. Let's get to the rest of the numbers, starting with the top gainers for yesterday's session. We have Caviton up 10%. So we have Chams, we have GTCO from the banking sector up 10%. So mostly up 10% for yesterday's top 5 gainers, but obviously a mixed bag there. We have NASCON up 9.98% at 67 Naira 75 kobo per share. Let's move over to the top losers for this session. Also a mixed bag for yesterday's top losers. We have Deep Cap down just under 10%. Computer Warehouse Group down just under 10%. Also Alta Briscoe, UPL, and Nichols also down all of them down just under 10%. So let's quickly get to the sectoral performance to give you a broader picture of how the market performed yesterday. So the sectoral indicators that we track here on the show, all in positive territory yesterday. So we're seeing this recovery after that 2 days of profit taking, where investors just basically took a break and decided to book profits. But the market is on the rise again. Banking index up 7.82%, mostly led by the tier 1 banks, the heavyweights, Zenith, GTCO, UBA, and some other banking counters. Insurance sector also picking up yesterday, picking up some steam yesterday, up 2.1%. The oil and gas index marginally up 0.02%, but obviously some activity going on there, especially with Eternal news coming out from Eternal recently. Consumer goods up a surprising 4.3%. So we are actually seeing some positive sentiments, especially around the cement companies. Industrial goods also up 0.35%. So that's the market snapshot. Of course, market is open today. Trading began at 10 a.m. We'll bring you the numbers, more of the numbers from today's trading when we get them. In the meantime, we'll take a quick break and we'll head right to our first conversation. Join us again. Welcome back on to our awesome packing top headlines from across the country. The Central Bank of Nigeria has accused commercial banks of hoarding over $5 billion in foreign currencies, surpassing the threshold approved by the Apex Bank. And it blamed the scarcity of forex and the depreciation of the Naira against the dollar on the actions of deposit money banks. Also, Nigeria's Apex Bank has fixed $1 million as a minimum share capital requirement for international money transfer operators in the country. Now, this is part of its new guidelines to IMTOs operating in the country. Well, joining me for this and other business headlines is Muktar Mohamed, CEO, Asheer Dynamic Solutions. Let's get right to it. Muktar, what do you make of this accusation by the Central Bank of Nigeria to banks saying that they're hoarding up to $5 billion in foreign currencies and are contributing, first of all, beyond the threshold they're required to hold, and secondly, also contributing to the scarcity in the market? It's quite interesting that the CBN appears to be putting the blame at the door of the banks in terms of the scale of liquidity that we have in the system right now. But what do you make of this?
Esther, it's said about the regulator that does not know his power. I think for me, that's what I see, what they are trying to say. You shouldn't forget that some months ago, this same CBN were trying to pay off some of the debts to the bank. At that point, I think they've done about 2 billion, and they said they were owing the bank. They still have an outstanding of $7 billion to give to the bank. So I don't know where these, and if you knew the bank had those kind of liquidity, why were you trying to pay off some of the debt that you felt you were owing the bank? So I think they just passing the buck. But again, I have said it in one of your programs, I think in subsequent programs on other platform, and I wonder why the CBN it took them this long to get the bank involved in the FX market, because there came a time that they said they were going to make sure that the bank have in their banking hall where we have FX decks, where as anybody can get in there, then get your FX at the rate, at the prevailing rate at that time, making sure that they put it on the board, and then you just purchase relevant document that like is done globally. I keep saying why the Naira has tumbled to where it is today is because the retail investor, those that needed $1,000, $3,000, $5,000, or $10,000, normally patronize the Bureau de change, and that market was taken away by the CBN, was suspended, and the CBN did not create another market for those investors to access FX, and that has been the root cause of what has happened now. So you had one market player that was to meet little retail investor, and again, then the point of demand and supply comes to play, because those retail investors that want 1,000, 3,000, or those that are traveling that just need $4,000, or those that are going to pay school fees, that the school fees is going to be paid in sections, will not be going to the autonomous exchange market to have that. They need to go through their banks. And so how much of this were being given to the bank? So I think it's better never than lead. I mean, it's better lead than never.
Right.
But I think they waited too long.
Well, first of all, do we even know, and are you able to tell us what the threshold is, for one? And secondly, how could this potentially affect banks' operations? Could there be potential disruption if they're being asked to give up some of that FX liquidity? But of course, if we do know what the threshold is, perhaps that will give us a better idea of how potentially disruptive this could be for the banks themselves.
I think based on the CBN circular, they say the threshold should not be above 20% of shareholders' fund. And also that is also depending on their foreign commitment. If they have any foreign commitment in terms of debt that they are servicing. And then the CBN said, again, that is excluding those, they must have cash and liquidity that might be turned into, that may be tied in government security. So I think that threshold is it's going to be depending on individual banks, because it's a 20% of shareholders fund. So hopefully, I mean, that is individual bank and the CBN. I'm sure that's where they calculated to get that $5 billion.
$5 billion.
Now, in terms of profitability of bank, I'm sure that's where you're trying to go into. I think we must not forget that these banks actually were forced to put it at the exchange rate at that time, which was about 360, was moved to 420, and when the floating of the currency came, they moved it to 750, and that's why we saw the kind of result in when it came to excess FX revaluation. But as it stands today, knowing that CBN have said the market is market determined, I mean, it's now willing buyer, willing seller, is above that. So it will still, in the long run, now goes back to the banking.
Right.
Bank will still make more profit from that. Now, Esther, the other point that people are not looking at is the CBN came out some months ago to say that those FX revaluation funds should not be used for operational reasons or to pay dividend to their shareholder. Now, if you are telling me that I cannot sell some of those FX in the autonomous exchange market and now have Naira liquidity, you don't have the right to tell me what, because that also comes off in profit in terms of Naira liquidity. And so that all could also be paid to their shareholder, and they all tied into investment, because if those funds that are now being changed from the FX to Naira are not tied into long-term investment instead of government security or treasury bill through the OMO auctioning, other form of investment in the equity market, you might get to see a lot of liquidity in the system, and that also will damage whatever the CBN is trying to achieve in terms of bringing down inflation. So they need to be careful.
But that leads me to my, you made some very, I must say that you made some very excellent points there, but that also leads me to my next question. Just reading that circular, just, the tone of the circular, one gets the impression that if these banks comply and the liquidity, in quotes, hits the system, there will be a marked difference in terms of supply. In your opinion, are you expecting that that will be the case?
Exactly, Esther. That's already the case, because reading this morning, we've not even gotten so much details. The market it has moved to from a high of 1,500 to a low of 1,300 as started yesterday. And this will be there will be continuous inflow of this liquidity into the market. They are not going to just put up the whole 5 billion at a go. And again, I think the game changer will come in now if bank customers also can now go into the bank, fill their document, and be able to have FX, especially for those traveling and those paying school fees. That also will help drag down the price. So I'm waiting to hear banks send letters to their mailed or letters to their customers saying you cannot access FX at the prevalent price at the import-export price, depending on willing buyer and willing seller. That will be a game changer that would definitely bring down the price finally.
Right, just a final point on this particular story. I just wanted to take your mind back to the beginning of this week and in the run-up to this week that we're just concluding. All the comments that have come out from the central bank, the statements around liquidity in the market and how they're planning to address the fundamental issues within the market. They mentioned things like transparency, the banks or players within the market playing by the rules, etc. The central bank, sort of believes that in tackling those root problems, that will solve liquidity. But when one looks at, when we talk about where the supply is coming from, we know where, the supply should come from. But obviously there are challenges in those areas. So, but what goes through your mind when you think about all the pronouncements of the CBN, especially since the beginning of the week, and looking at where the Naira is? Because part of what the CBN is doing is also to send out a signal to the market that, one, it's in control, it's in charge of the market, and trying to establish that control, and also control, if you will, the narrative around the Naira. But it doesn't appear to be working if one now goes to look at where the Naira is at both the NAFEM, the official market, and the parallel market. So what do you make of all of this information flow coming out and how the Naira and the market has been reacting?
Yeah, thank you, Esther. Sometimes pronouncement could help bring the price down, like what we have seen with their pronouncement some days ago. But pronouncement alone will not stabilize your currency. And like you said, liquidity is what you need to stabilize your currency. And once you make those pronouncements and you don't match it up with actions, then the speculators will lash on it to make more gain. So I think their pronouncement in terms of they're trying to use administrative purposes to stabilize the Naira. You cannot just use 1 tool to stabilize the Naira. You could use the administrative purpose to bring it down, like what they are doing now. But again, to really stabilize it for the long term, there must be a monetary policy tool. And the only monetary policy tool that can stabilize the Naira now is liquidity. And how do you attract those liquidity should be what is paramount on the mind of the CBN at its stand. So any pronouncement will work for the short time, but pronouncement will not keep it for the long term. So you must match your pronouncement with actions. And the actions that the market needs as it stands now, I keep saying, is that injection of liquidity. Will the CBN be able to inject liquidity? Because you can't just say that, oh, you leave it for the market forces. Nobody, no certain bank in the world leaves its currency for market forces, because market forces will take advantage of your currency. You need to do the needful. And I think the CBN should know that there will be time that they should announce to the market that we will intervene to meet legitimate demand, especially since you've made the market autonomous. And knowing that 80% of what we consume in this country are imported into the country. If you decide to intervene and bring down this rate to stability, you not only bring down inflation, you also attract foreign direct investors and portfolio investors and Nigeria in the diaspora. That also is a key driver to stabilize the currency.
Right. Let's move on to our last story, still around the central bank, but a different pronouncement this time. The Apex Bank has fixed $1 million US as a minimum share capital requirement for international money transfer operators in the country as part of new guidelines for that set. But what do you make of it, and what kind of impact should we expect in terms of how fast or how soon these players in that space will comply?
I think that's a very good decision the CBN have made, because before now, especially remittance from Nigeria and the diaspora, you mustn't forget, because before the advent of COVID, I think sometime in 2019, remittance from Nigeria and the diaspora was even higher than sales accrued through crude oil sales. at that time. And so now those diaspora were looking at the disparity in terms of the official market if you have to go through this money agents or going through a third party. And most of them were actually doing through the third party. So you were not attracting any liquidity because I can't be exchanging at the official price of about 400 and something at the point it got to 730, and where at the other parallel side is about 1,000. And so I think it's a good move to attract liquidity into the system. We must always know that we attract liquidity into our system through we sell off crude oil, direct portfolio investors, foreign portfolio investors, foreign direct investors, foreign portfolio investors, and also remittance from Nigeria and the diaspora. This remittance was non-existent. With this, now I think it will encourage them to remit more of their funds through the money agents into this country. And by the time you get that, that means you are adding up to liquidity of FX in the economy. So that also is another good tool. And like I keep saying, the CBN is beginning to use it as administrative tool to see how they can stabilize the Naira. If that worked out, I think, Esther, I can say that is also another game changer, because that could attract over $20 billion into the Nigerian economy. That is huge.
Oh, you're absolutely right. That is huge. Thank you so much, Muktar, for talking to us today. Appreciate your time on the show. That was Muktar Mohamed, financial analyst, of course. So looking at some of our top business headlines this morning. We'll take a quick break and we'll be right back with international headlines. Join us again. Welcome back. Now, football is one of the most profitable industries in the world, with a significant economic impact in infrastructure development, sponsorships, TV rights, and transfers of players. Now, it's such a powerful sport with the ability to link communities, break down cultural barriers, and stir emotions. But beyond all these, financial forces are transforming the game of football as more private capital floods into the sport. Well, joining me to discuss this today is Babatunde Koiki, sports editor here at News Central, and also joining me is Samson Male, a sports journalist. So let's get right to it. And Tunde, I'm going to start with you. Now, it's been said that the key to unlock the development of a viable football industry anywhere in the world is the player. According to data, the most successful clubs in the world presently spend between 60 and 70% of their gross earnings on players' wages and transfer fees. So that's where the bulk of football money, we're told, goes. So Africa, and experts are saying that Africa must therefore continue to churn out exceptionally gifted players that will add their unique touch to the game to keep the money flowing. Just to get your thoughts on that.
Well, Esther, that's quite correct. Players form the bedrock of the value that many of these clubs actually possess. And when you consider the fact that some of these players are now going for as much as, well, 9 figures in terms of, I'm talking dollars or euros, you can understand that they possess significant value. But the honest truth is that for African players, they do not have quite the same value as their European or maybe South American counterparts, for the very simple reason that the African football ecosystem is pretty much underdeveloped. And that is why a lot of these players are still in their raw or nascent stage. And that is why it is when they take them to Europe and they're at European clubs, they undergo better training, better facilities, that is when their value begins to increase. It's pretty much the same thing that happens with extractive industries in Africa here, where you take crude oil, take it out of the continent, refine it, and bring it back as petrol. That is when it has value. The same thing when you do it cocoa as well. You take cocoa from the Ivory Coast, you take it abroad, you make it into chocolate, and bring it back to Africa and sell, and that is when it has value. So the honest truth is that the ecosystem in Africa here is pretty much undeveloped. The players are still in their raw nascent stage, and that is why if you notice, the trend for a lot of European clubs in Africa these days, especially in the Nigerian market, is to go for younger players who are at academies, not players who are already at professional clubs, because these younger players are trainable, they're not yet exposed to bad habits by their senior colleagues, and they're pretty much able to put into the industrial complex, football industrial complex in Europe, refined so that they can become bigger and better products.
Well, thank you so much, Tunde. Let me bring you in, Samson, and broaden some of the points that Tunde made around the African football ecosystem and players. Now, unlike European football clubs and leagues that currently dominate the billion-dollar game in both investments and competitions, our African football has far less money for vital operations. For example, Real Madrid, Europe's most valuable club, has a market value of $5.1 billion, now compared with Egypt's Al Ahly SC, the most profitable in Africa, with a market value of just over $35.4 million. Could you speak to this point and why we're not yet seeing significant investments in the sport on the continent?
We're not getting specific investment, Esther, because we're not doing the right things. I mean, I was at the ASEC Mimoussa training ground in Seoul, Benin a few days ago here in Côte d'Ivoire, Ivory Coast. And I was telling a few journalists, colleagues that, look, we're not ready yet, even for us in Nigeria, because you get in here, ASEC Mimoussa, one of the leading clubs on the continent. I mean, they have a training facility that even the Super Eagles of Nigeria do not have in Nigeria. And that's the story across various countries on the continent. From infrastructure, we don't even get it right at club level. And if we don't get it right at that level, we don't expect that we can get it right on other levels that will bring business interest and, of course, investment into football. And I think that's where it starts from. So we need to get our modeling right. Once we get infrastructure right, then we can begin to talk about how do we have the organizational setup. And then, of course, the marketing, the branding, all of these form, the potpourri of what will make you attract the kind of investment that you will get when you want to talk about money being drawn into football, especially on the African continent. And very few clubs, and we'll give it to the North African clubs who are trying to get it slightly right. And in doing that, we see how different, their approach is, and of course, the kind of attention they draw by those who are willing to invest in it. I mean, we were talking about earlier, you spoke about television rights. I mean, we are struggling even as the Nigerian Professional Football League or Nigerian Premier Football League, whatever the name is called at the moment, to even get it right with our TV model. I mean, we're talking about marketing, we're talking about branding the league as it is, and we're not there yet. We'll talk about South Africa. Why are we always referring to the PSL in South Africa? It's because, again, this guy sat back, decided to look, we need to do this thing very differently. And even at that, even why we're always referring to them as one country that has gotten their football modeling almost right, you begin to ask yourself, comparatively with what you have in Europe, what is the share in terms of monies they've been able to attract today? So to keep it short and simple, we are not getting our modeling right.
Right. Tunde, I'd like you to also share your thoughts and perspective on that, talking about the business model. I mean, African football officials, when they go for international games, even at the regional level, just what I mean is lower than the World Cup and at the regional level, etc. They do have conversations with club owners or football officials from Europe and other parts, South America and other parts of the world. I imagine that perhaps by now, we would have sat at the table to sort of come up with maybe something that's tailor-made for Africa. I know that we still have some fundamental issues at the grassroots level, but are we being held back by the human factor elements such as corruption, which has been cited as one of the issues why that continues to hold the industry back? Lack of a proper vision and lack of being able to properly articulate what we want as an African footballing continent. What are your thoughts?
I think between you and Samson, you've absolutely hit the nail spot on the head. The problems that exist in the African continent regarding the football ecosystem is typically man-made, and it has to do with a lot of issues that you've raised: corruption, in lack of integrity, a lack of know-how, lack of capacity. Also, there's also issues regarding lack of financial probity as well. So these are the issues that continue to mitigate against the growth of African football, as it were. And he mentioned Seoul Benin in Ivory Coast. Seoul Benin has been in existence for over 30, 35 years. You come to Nigeria here, probably the latest footballing facility that's been built in the last 10 years is the one that was built by Raymond Stars in Nigeria, and that was a private initiative. We've been held. You look at the Nigerian ecosystem and you wonder why people keep agitating for the government to take its hands out of football or sports, let it be privately run. And that is the way you can now begin to see a lot of growth in that particular industry.
Right. I just sorry to butt in, Tunde. Something just crossed my mind. Just wanted to get that out to share your thoughts. We do have a lot of past African stars who played most of their careers in Europe, South America, all across the world, especially in Europe. And of course, they saw how things were done there. Maybe not specifically at the management level, but they did have, get some, front row seat, as if you were, in terms of how things were run and how the business was run. Many of them, over the years, over the decades, have come back to the continent to try to get involved in grassroots football, even at, the regional levels of their various football associations, etc. Why hasn't that had an impact so far?
It's plain and simple. It's just a lack of capacity. Great players don't necessarily make great administrators. And we've seen that time and time again. Great players don't necessarily make great coaches. We've also seen that time and time again. For example, at Enyimba Football Club of Aba, they removed the long-serving chairman, Chief Felix Agu, who is regarded as one of the most successful club chairmen in Nigerian football history, and replaced him with a bona fide African and Nigerian football legend, Kanu Nwankwo, as the new CEO of that club now. It remains to be seen if he has the capacity, the know-how, the expertise in order to drive change in Enyimba. Enyimba is one of the biggest brands in Nigerian football, but a lot of people believe that market, that its very presence hasn't been tapped as much as it should have. So a lot still needs to be done in terms of finding people with the right capacity, people with a business background who can see football as a business and not necessarily as a pastime.
Right, Samson, let me bring you in here. I mean, let's talk about AFCON. One of the avenues for revenue, obviously, for the host country, the association, etc., is ticket sales. And I know that, my producer tells me that the opening match was offered at the highest rate of between 5,000, 10,000 and 15,000 CFA, equivalent to about $8, $16, and $24. If you benchmark this against what you get elsewhere in other climes, for a competition at this level, what can you tell us in terms of how we're pricing ticket sales vis-a-vis affordability, etc.?
Now, we're talking business now. The purchasing power of any African, I don't want to degrade or denigrate our purchasing power, economic value as it is. But again, you begin to ask yourself, if a typical African is living below $1 per day as it is, and then he has to commit $8, $15, or $20 to go just watch a game for about 90 minutes. Is that cost effective for him? That's the question you begin to ask yourself. So when you talk about the pricing, season tickets in Europe could go for as much as 2,000, maybe Balotude can correct me, more close to 10,000 or even more, or 20,000 euros or pounds, as the case may be. But it can be compared. And there are a whole lot of factors you need to consider. What's the purchasing power of these people who are passionate about wanting to watch their favorite team play? I'm in Ivory Coast in the last 4 weeks, and I've had opportunities to speak with several fans, and they are even frustrated that even the ticketing process is somehow was almost becoming a monumental failure, because the Confederation of African Football, for the first time in its history, and I stand to be corrected, tried to introduce this online ticketing system where they wanted to ensure that fans can actually get in and can buy this ticket, off. Now, let me give you a scenario, because I spoke with a lot of fans. Now, why you're saying, or why it's clear that Category 3 tickets could go for about $5, Category 2 could go for about $8, Category 2 or 1 could go about 15. This ticket was sold as much as $100 for the opening match. Some even have to buy it for close to about $150. So it also tells you about how passionate the fans are. Even though they're going to get value for their money, they're also willing to pay.
Okay, Samson, thank you so much. Tunde, finally, and perhaps on a more lighter note, I know that the industry has so many problems, but hopefully the authorities, both the private sector and the government, can continue to work those issues out. But on a final note, apart from bragging rights, please remind our audience what the winners of the tournament, that's AFCON now, will bring home.
Oh, yeah. Well, the Confederation of African Football has actually increased the prize money that was on offer before. Now, the winner of the competition will get $7 million. The runners-up will also get $4 million, while the two losing semi-finalists will also walk away with $2.5 million. And it's been quite an appreciable increase when you consider the fact that even the winners of the South American championships don't get as much as $7 million. It's been applauded by CAF, by fans across Africa, but a lot of people believe that it can and should be much better.
Well, there's certainly more room for progress. So thank you so much, both of you. I must thank you for your time today. That was Babatunde Koiki, sports editor here at News Central, and of course, Samson Omale, a sports journalist joining us from Côte d'Ivoire. Well, that's our edition of Business Edge today. Remember to follow us on social media. We are at News Central TV. From the team and I, have a good day.